The Union Budget for 2023-24 has extended a bonanza for the Indian Railways, a budgetary support of 2.45 trillion rupees. It is nearly a quarter of the centre's total capital expenditure outlay of 10 trillion rupees. Increasing by 50% from the 2022-23 revised estimate of 1.6 trillion rupees, it is the highest ever outlay in the history of railways. Budget allocations to the railways have been surging consistently for the past fiscals, and yet several crucial challenges demand a judicial allocation of these funds. The railways' extra budgetary resources have fallen from 81,700 crore rupees in 2022-23 to the budget estimate of 17,000 crore rupees for FY 23-24, which is a sharp dip of 79%. While its projected appropriation to pension funds marks an almost 25% growth, its expenses for current employees will be growing only by 4%. Experts believe judiciously allocating the increased outlay will be one of the biggest challenges for the railways.
See, last year's capex was 140,000 crore, and this year it is 100,000 crores more. And eventually, what railways is dealing is infrastructure, and a budget period is only 12 months. So to spend this 100,000 crores in 12 months, I think it itself is a tall task. It is doable. The biggest challenge is speedy execution of whatever is committed.
One avenue for channeling the massive outlay will be the Ministry of Railways Mission 3000 MT, which aims to achieve a total freight volume of 3,000 million tons by 2027. The Indian Railways earnings from freight loading in the first 9 months of the financial year 2022-23 too surpassed last year's earnings in the same period. Railways earned more than 1.2 trillion rupees during the April-December period of the financial year 2022-23, an increase of 16% from the same period in FY 22. Freight loading isn't the only focus area for the Railway Ministry. Infrastructure projects would be a major magnet for railway spending. The Finance Minister had said in her budget, 100 critical transport infrastructure projects for last and first mile connectivity for ports, coal, steel, fertilizer and food grain sectors have been identified. They will be taken up on priority with investment of 75,000 crore rupees, including 15,000 crore from private sources. In 2023, the thrust will be on increasing the number of Vande Bharat trains, introducing hydrogen-powered trains, laying new tracks, and completing the Ahmedabad-Mumbai bullet train project.
First of all, anyway, the carbon footprint of railways is lower than roads. And with the focus on hydrogen-powered trains and other technology interventions, I am sure even in terms of the climate impact, it will become very critical. So I think while there has been a significant impact or increase in outlay, it needs to be channelized in the right priority areas even within railways.
Also on the cards are new dedicated freight corridors, high-speed passenger corridors, and multi-tracking and signalling upgrades of congested routes. Experts suggest that the money must be dedicated to upgrading the fixed infrastructure in terms of signalling, electrification, tracks, and so on. Passenger experience in terms of faster and more accessible ticketing, station maintenance, and cleanliness, etc., will also be areas of possible updates. A lion's share of the railway's total expenditure is directed towards its employees, both past and present. In 2022-23, according to revised estimates, railways spent more than 1.63 trillion rupees on payments, allowances, and pensions. This is nearly one-third of its total expenditure of 5.19 trillion rupees. Experts highlight the need to leverage its current workforce and incentivize higher returns.
I don't think it's to do with additional recruitment. It's to do with the average increases in compensation costs which have happened over the years. And I think that the issue really is how to leverage this workforce and generate higher returns, higher revenues, because a lot of it has to do with capacity building, training, redeployment, identification of new avenues.
At the heart of a judicial allocation of budgetary outlays, however, is the railway's overall operating ratio, or the proportionate expenditure the railways incur to earn every 100 rupees. This is expected to improve to 98.22% in the current fiscal. The ratio was at 107% in FY 2021-22. Higher operational ratios often indicate inefficient usage of revenues. However, despite a sharp rise in capital expenditure by the railways over the last few years, the national transporter's operating ratio has been projected to worsen, rising to 98.45% next year. Maintaining a healthy operating ratio, therefore, will be another major challenge for the railways, experts believe.
Over the last couple of decades, freight has been cross-subsidizing the passenger part of it. And if there is going to be a decline in the freight, then the operating ratio goes for a toss. So maintaining a healthy operating ratio, bringing in the shift from road to rail, that will be the second part of it. And also they have lost out to the air mode of transport in the second class AC and the third AC. All of this needs to be plugged in.
Guha also believes the funds could be channeled towards a few softer sectors within the railways.
It needs to overcome certain other constraints as well, in terms of first and last mile infrastructure, in terms of new technology. But the softer issues will also need to be addressed so that railways can effectively compete with roads. And much of this will require collaboration with a larger ecosystem of transporters. So, for example, point-to-point delivery. So there needs to be alliances, there needs to be collaborations, there needs to be transshipment facilities. Then the issues around focusing on some of the economic corridors. So in terms of goods traffic and freight requirements, those are the areas to focus on.
Experts, therefore, are clear that the additional trillion rupees allocation in this budget is in itself a major challenge when it comes to clearly defining allocation goals for the railways. First, stabilizing and then driving down the operational ratios should be a major priority. The outlay should be a catalyst for fast-tracking new technologies, improving online and offline consumer experience, and increasing the modal share of the railways across sectors.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.